Hello, everyone. If you're just joining, welcome to Deal or Bust, where founders come live. They try and sell their companies. Today, we've got a good one with 3 hungry buyers. You're going to meet them in a second. They're going to go back and forth. But first, if you're just now joining, watching the replay, make sure to join us next week by going to nathanlatka.com/next week. You can see that link below in the chat to make sure you don't miss out. For everyone else, stay tuned. We've got a great show today. We're going to let everyone sneak in here. While everyone is sneaking in, you can go ahead and say hi in the chat just to make sure we've got all the tech working correctly. Let me know where you're joining from in the chat, whether you're joining on YouTube or Facebook or anywhere else. You should be able to do that. I should be able to see you. All of our experts joining today and our buyers joining, which is great. I think we've got all of them here, except Darwin, can you email Ryan Culp and see what his status is? I copied you on his email last night. Just email him and see what his status is. Ryan, if you're watching right now, Darwin will send you the StreamYard link again in the chat, so you have it. That StreamYard link is how you call into the back end. All right, we've got Jamie McCardle, Chirag Shah, Robert Moreno. Good to see you. Stephen Ullman joining. Riley from middle of nowhere, Michigan. Riley, we like middle of nowhere. Sometimes that's the best place to be. That's how it works. We've got Kevin Sahin from France. Kevin, good to see you. Or Sahin from France. Michael on YouTube. Ryan. Okay, so Ryan, you're here, but you're not in the chat. We need to actually get you so we can show you on the screen. So Darwin, you can just actually paste the StreamYard call-in link in the YouTube chat so he can see it like live. We've got Peter Zotto, who's going to be an expert later on talking about pricing, joining from Boston. Yafri from Mexico City. This is great, guys. We are on a roll. I think we are all good to go. From everything I can tell, says all systems are go. So everything seems to be working properly. Before we continue, guys, I do want to get some context. Okay, I do want to get some context. Again, I want to make sure everything is working properly. So what I want to have you guys do is head to this link to check in real quick. So before we get started, head to that link to go ahead and check in. All right, that link is the check-in link. And it's a tweet I just put out about the show. So if you tweet that or comment on it or retweet it, that is how I know you can hear us clearly and see us clearly. This is how you go view that. Again, it's just at Nathan Latka on Twitter. At Nathan Latka on Twitter. Again, if you're just now watching the replay and you're missing the live right now, make sure you don't miss next week's episode. Go to nathanlatka.com/next week. Meantime, let me just see if this Twitter thing is working. Let's see if it is working here. Again, that is the link. I am not sure if okay, good. Good, the link is working on YouTube, good. All right, so yeah, it looks like check-in's working. I see Max Weinstein just like the tweet. Retweets happening. Preston Tucker's live. We've got Emerson Spartz, who will be joining later as one of the experts. Very good. All right, guys, so we're good to go. Let's not waste any time. I now want you to meet our buyers. So how this will work is you're going to meet the buyers first. Then we're going to meet the founder who's worked really hard. A lot of you guys are watching your founders. He's built a great company. We're going to see if we can make a deal happen here live. The buyers have not met the seller, and the seller has not met the buyers. So literally anything can happen. I'm watching all the buyers' faces in the panel here, and they're going, what the hell did I get myself into? What is about to happen? I see Ryan, Culp, Akil, and Tim. Without further ado, let's go to introduce them. So first up, we have got Ryan Culp, who is with Fork Equity. He runs Fork Equity, but more importantly, he's also an operator. 11 companies acquired, built. FOMO.com is the largest with 1.1 million in revenues. You're going to meet Ryan in a second. Our second shark today, Tim Shumacher with SaaS.group. They've acquired 4 companies. Tim's last deal was Snipply for $2 million. He's got $25 million in capital to deploy and is planning to do 3 to 4 deals this year, which is great. Last shark, Akil Jabber, runs Horizon Capital. 12 companies acquired. Last deal was Longtail Pro. He's got $20 million in capital to deploy, planning to do 3 to 4 deals this year. In that order, let's first bring Ryan on. Add to stream. Ryan, what's up, man?
Hey, everybody. How are you? It's a nice 3 a.m. here.
I was going to say, you're in Korea, so what time is it?
Too early or too late. Depends what kind of day you're having. But it's 3 a.m. and I'm feeling peppy.
I love that. So, dude, the reason I invited you on for this particular founder we're about to meet, it's right in your wheelhouse. You bought, well, tell everyone the name of what FOMO was before you bought it and what you bought it for.
It was called Notify. We haven't mentioned publicly the price, but it was low 6 figures, and It was a Shopify only app that we then rebuilt and grew about 500%.
Very good. So looking to do deals, also operating again, FOMO.com. Second buyer I want you guys to meet is Tim Shumacher. So we're going to unmute Tim here, bring him live on the stream. Tim, how are you?
Good. How are you? Thanks for having me.
Your audio is not. Oh, now your audio is working great now. Good. So you are not in Korea. Where are you based?
I'm based out of Cologne, Germany.
Very good. So the last deal you did was Snipply. What sorts of deals are you looking for now this year in 2020?
So we look for SaaS businesses between 500,000 and 5 million in annual recurring revenue.
That's great. And typically you're paying multiples of what? Obviously a lot of dependencies, but usually what are you paying?
Lots of dependencies. We look for profitable businesses, and then it's anywhere between 3 and 5 on EBITDA.
Very good. All right. And last buyer, we're bringing in Akil Jabber with Horizon Group. Akil, how are you?
I'm good. How are you?
I'm well. So where are you joining from?
So right now I'm in actually Guadalajara, Mexico, but actually I'm Canadian.
Look at this. Look, it doesn't get more internet. YouTube Live, baby. Facebook, this is how it works. International. So guys, there you have it. Ryan Culp, Tim Shumacher, Akil Jabber. Akil, your last deal was Longtail Pro, correct?
No, that's not correct. We actually, that deal got sold off. So we did another company in Brazil last year.
Okay.
We're looking to do about 2 deals this year, and exactly the same spot that Tim is looking at, that 500 to 5 million ARR.
Very good. I'm looking forward to watching you guys beat the hell out of each other. For the founder you're about to meet, it will be a lot of fun to watch. Everyone else, now that you've met the sharks, again, we're about 60 seconds away from meeting the buyer or the seller. Before we do that, though, just want to touch base again. So I see Danny Brown, I see Joe Barnhauer in the chat, Sam Cohen, Dustin Struckman with Hello Exit. We'll talk more about that in a second. It looks like chat and everything is working. Guys, real quick, just so we can get, again, more context while we're live here, because I can customize the presentation around what you guys are. Feel free. This is not one of those shows where you can't like spam your own link. Tell me in the chat right now if you're a founder or an investor. And if you're a founder, go ahead and put the link to your company in the chat. So founder, investor, and then link to what you're working on in the chat. While we're doing that, Tim, real quick, I know you've looked at a lot of deals. What are you seeing right now generally in the SaaS M&A space, especially as COVID's hitting and the world's in this crazy spot?
Well, interestingly enough, the SaaS space is not really affected much. At least I'm not seeing it. There might be kind of some specialty travel event SaaS stuff, which might got hit, but the rest is just business as usual. And actually, any remote stuff is booming.
Mm-hmm. Mm-hmm. Very cool. And are you doing deals off your own balance sheet as your own capital you're investing, or give me a little bit about your background?
So I'm a serial entrepreneur. Started a company called Cedo.com, which I'm sure many of you are familiar, who like bought domains for their own business or also for the business of trading domains. I've started a company also behind the ad blocker, AdBlock Plus, a couple of years ago, and I've been investing ever since. And so it's a mix of my own money, but also we're leveraging it with some debt, and we're also taking a little bit of friends and family money now, since this is obviously a capital intensive business. So majority is my money, but rest is kind of from other people.
Yeah, smart way to do it. We love operators. I want to say hi to Conrad Hawkinson, saying just a speculator, but always love enjoying about SaaS. Good luck to everyone. We're going to meet the founder here in about a minute. Another one, we've got Jesse tuning in, who is a founder in the e-commerce and drop shipping space. So he says you guys won't care about his business because it's not SaaS, but he loves the show. So are you guys all doing exclusively SaaS deals, Akil?
Only SaaS.
Brian? Tim? Okay.
Mm-hmm.
Yeah.
All SaaS. Very good. Well, guys, good seeing all of you in the comments. So let's not waste any time. Let's jump right in. We're going to meet the buyer. We're going to go through financials. And then how this is going to work is over the next 10 minutes or so, we're going to let Ryan, Akil, and Tim just ask questions to the founder and vice versa. Because obviously when you're selling your company, you want to make sure it ends up in good hands. So there'll be a back and forth with the goal of Ryan, Akil, and Tim ultimately making a statement that sounds something like, I'm out for these reasons, right? Or I'm very interested, I'd pay a price around X, and let kind of a live negotiation happen. So Ryan, Akil, Tim, that's what you should be thinking about as you're asking questions. How do you actually get to that sort of statement? All right, with that being said, let's go ahead. I'm going to share my screen again. I am going to first introduce get the logo up here so everyone can see it. Let's let's see, how's it's going to work? Present. There we go. So the company that we're going to be meeting today is one that I got connected through via Dustin, who's in the comments, Dustin Struckman, who runs Hello Exit. It's a marketplace for selling SaaS companies. And I want to, without further ado, introduce Andrew. Andrew, you should be live. Can you hear us okay?
Yeah, I can hear you guys. I've done meet everybody.
Very good. So listen, Andrew, we're role playing here. You're walking into the tank, baby. 60 seconds. What's LiveLeap do?
LiveLeap's is software that syndicates your Facebook Live to multiple social networks. Also sends emails, notifications, tweets to Twitter, LinkedIn. So essentially, you go live on Facebook and you can syndicate it across all your Facebook pages, groups, and send notifications across all your social media networks to let people know that you've gone live to increase the amount of viewers on your Facebook Live videos.
And get us in your brain for a second. Tell us about your background. Are you kind of all in on this? The house is mortgaged, everything, or is this like one side project and you've got a bunch? And why are you interested in selling at the right price?
No, we have about 5 different companies. Got into the film business kind of luckily through SaaS. LiveLeap has been a company that I started since 2016, and I've been able to grow it, and then it descends, then I grow it, and it's essentially I just don't have the bandwidth and time to put into it. But when I do put time into it, it grows significantly fast, and it's a very easy company to scale. Not to mention, we've never been real heavy on like back-end offers or any type of upsells. So being where it is right now, it's really interesting because in the right hands, it'll be easily scaled with the right budgeting and the right planning.
So first round, Ryan, Tim, Akil, product questions only. We'll get into metrics, revenue, things like that, but I want to make sure everyone understands the product first. So go ahead, Ryan, kick us off. Do you understand the product?
I think I understand the product. I'm curious why it's not one-to-many from Periscope to Twitter to YouTube to Facebook. Why is it Facebook to other things?
You guys ready? Can you hear me?
Oh, yeah.
Okay. I thought there was internet connectivity.
No, Andrew, did you hear Ryan's question?
Yeah. So it's a Facebook-based app. So it's essentially developed on the Facebook marketplace, if you will. So it starts out natively on Facebook, and then everything pushes from there. So that's really the reason why is the framework is built on Facebook's API.
Keep going around. So Tim, product, you guys, I'm gonna let you guys go here for about 2-3 minutes. Tim, go ahead.
Actually, follow-up question on that. Is it only using Facebook's official API, or are there any kind of unauthorized Facebook hacks?
No, there's none. There's zero. We went through a very rigorous audit process earlier this year, and we had to get completely authorized for everything. One of 50 apps actually in our space for live, and they cut everybody else off completely. So we had to submit our database, our code, the whole 9 yards. We had an entire third-party audit team go through our entire infrastructure, our processes, the whole 9 yards. So there is times when we've lost features because of the Cambridge Analytica stuff, but we were able to get through it through a very rigorous audit process. Michael was a part of it, but everything was good and ready to go. So we only do white hat stuff here. I am
and
from.
So they cut your competitors off, but not you?
I'm sorry?
So they cut your competitors off?
A lot of them that weren't white hat. I mean,
really?
the thing. Actually, I'm wearing a white hat.
This branding guy over here.
So with Facebook, if you're not white hat and you're doing anything that is outside their TOS, they shut you down almost instantly. So that's why when I say a rigorous process, it's like we had to go back and forth like daily for weeks. You know, this is why we're doing this. This is why we're doing that. And it all was based on the Cambridge Analytica scandal. I mean, it was essentially people were able to take people's comments and farm groups and farm pages, and LiveLeap has the ability to send the information to other places outside of Facebook. So they wanted to make sure that we weren't doing it in a malicious way. They wanted to audit our customer base to make sure there was no historical, political influence whatsoever. And it's like I said, it was pretty crazy. But I've been an internet marketer for about 10 years. So I'm very familiar with black hat, gray hat, e-commerce, the whole 9 yards. And I've always ran my businesses to be white hat. I don't really look for hacks or anything that's below border, you know, because it's just not worth it.
I have another question, but I'll wait for Akil.
Sure. Yeah. So do you have the Facebook partner? I know that's a kind of a badge to kind of filter that process out, right?
Yep. We're fully authorized, and we have. I mean, I think I have it right here.
Show the goods, baby. Show the goods.
Yeah. This is essentially this right here is the entire audit packet, February 25th, 2020. and it's essentially, I can't see. Sorry, guys. It's really bright in here.
Okay.
But this is essentially, Facebook sent us this, which we had to put on our company letterhead. And then we send it back with the exhibits fully executed, and it puts us on the actual Facebook marketplace and authorizes us as a Facebook approved application.
Okay. And sorry, just on the product, who are your kind of target customers and users?
We've always had a lot of internet marketers, obviously, because I launched it originally in 2016 as an internet marketing product. So when we launched it, we did lifetime access. And that's kind of how we raised capital and got it to where we could turn it into more of a SaaS MRR company. But for the actual customer base, it started out kind of as internet marketers, which then led us into a lot of different markets, many of which being real estate. Real estate was a big one. MLMs, any type of network marketing, small business. We've had CNBC and a few other companies use us, syndicating the hurricanes across the United States because people had family say, the hurricane's going on in Florida and there's family all over. And so what the news networks were doing is syndicating it to all their local pages. So you think about CNBC, for example, they have like a route stream that's wherever the location, right? Florida. But each individual news station has a location across the United States with its own Facebook pages, Facebook groups, email lists, all that stuff. So when they actually went live to give information about their storm, their attempt is to get it across the United States in a way that's fast and, of course, inexpensive, because a lot of the times those guys just spend so much money on equipment. So Lively has a very large type of audience, if you will, but there is certain markets that are extremely dominant. During COVID-19, we found that churches were going crazy for Facebook Live. I mean, it was like within 2 days of the COVID-19 thing happening, we had like 15 churches.
Andrew, something's wrong here. We've got network marketers and churches using the same tool. Something is talk about diversification in your customer base. Holy hell.
Yeah.
All right. Real quick question from Steven in the audience, and all you guys watching, you're watching Deal or Bust. Founder Andrew here with LiveLeap is looking to sell his company live to buyers, potentially Ryan, Tim, or Akil. They're working through questions right now. We're about to look at finances. You guys can ask questions in the comments and I will funnel them to Andrew. Andrew, here's one from Stephen Ullman. What % of active customers are grandfathered in through lifetime pricing versus ones that are truly paying on a subscription basis?
Roughly 3,000 and some change.
3,000 are on monthly recurring pricing?
No, 3,000 were grandfathered. And then right now, I think we have about 1,200 or 1,100 paying $19.49 or $2.99 a month.
Got it. Very cool. So guys, yeah, feel free to keep putting your comments in there. So good. That I think touches most of the product stuff. Andrew, let's jump into the money stuff here, right? So when did you launch the company and what was revenue, total top line revenue last year?
So in 2016, we launched, and it was, like I said, internet marketing launch. It was June of 2016. The launch itself for the beginning launch did about 475. And then post-launch, after we opened it up for 30 more days, we did probably about another 200, 220. So I would think it's right around 670 if you count Stripe and PayPal and everything else. And that was like an internet marketing launch. It was like, you get in now, you'll never get in again, da-da-da-da-da. For whatever reason, in 2017, we decided to go to more of a SaaS model so I could obviously scale the company and really build it into a SaaS company. I got tired of doing internet marketing launches. I mean, if you guys are familiar with the process, it's literally like you make something, you launch it, you move on to the next thing.
And affiliates going, where the hell is my commission? Where's my commission payout? It was too small.
Exactly. And I've never been a fan of it because I feel like you're never putting your full heart and soul into a product, and you're not improving the product, and you're not doing anything to make it a long-term business. And I've always been the type that likes white hat long-term businesses for obvious reasons. But internet marketing and launches, you could obviously make more money because it's turn and burn, turn and burn, turn and burn.
So Andrew, just read these for people listening to only the audio later. Just read here the gross profit 2017, 2018, 2019.
GP, hold on, I'm looking. GP 2017, $180,258. 2018 GP, $266,813. 2019 up to September, it looks like we have a few months missing there. $170,725 GP, totaling $617,796, and that's without the launch.
Ryan, question about the revenue.
Well, I'm curious. I'm curious what the churn looks like now that you have a SaaS model amongst those 1,100 users. Because like you said, the launch, of course, you're now SaaS, but your users are still primarily these churn and burn launchers. We have them at one of our products, FOMO. They do a huge launch on ClickFunnels. They come through our customer support. They have 50 customization requests. They sign up for a month or two, right? And then they're gone. So we don't even really want to cater to these folks because they come in and out and they kind of like berate our support team. So even though you're SaaS, your customer is still like the former self. They're signing up maybe for a month or two to do a stream or 2 or 3. I'm curious how you're handling that.
Yeah, the churn is never. I can actually pull it up. Hold on. Do you want to actually know the churn, or are you wondering about the way that is in the support center? Because it seemed like it was kind of a double-sided question.
I guess I'm actually curious, how many streams is the average user doing per month in the 1,100 user customer cohort, the current subscribers, someone who bought the deal a few years ago?
I got you. So we have, when I looked it up on AWS, I think it was 70, it was, I think 64 to 75%. I can't remember, but it's literally 3/4 of the customer base uses the software every single day.
Every day.
Every single day. Yeah. It's always been pretty high, and it's been surprising actually because of that internet marketing 3,000 customer base, and everybody's using it every single day. Even when you look at the Lively group, it has 6,000 people in it. When you actually go to those people's pages or their profiles and you look at them, it's like stream. They're all streamers.
Interesting. Nathan, I kind of want to insert a product question that I think relates to this metric.
You guys, hey, listen, this is your all's money. Akil, Tim, right? This is your money, not my money. You ask any questions you need.
Yeah. So first of all, I'd be interested in kind of what happened after September 2019. Kind of what are some more recent numbers, like pretty much last month, like what like May, for example. How were your May numbers?
May was 15. We hit 15K MRR.
15K MRR, and what are your costs? I mean, this is just revenues, but like how many people work on the team, and what are the costs of that?
The costs are nil. I mean, right now I got expenses down because we had a change in staff. We had a support person who was $2,500 a month, and but she was doing other things for some of my other companies. But now the cost for the last 2 months is right around $1,400 a month for the business, and that's for a VA. And then I always say about $500 a month for development, even though he only does about $250. We have like a maintenance contract where if there's any issues or anything going on, that $250 is kind of like a maintenance contract. If he does more development, then I just basically pay him and his team what they want for each project. Like if I wanted to add a feature, I pay them for that feature. I don't pay them by the hour or monthly salary, none of that stuff. They're an external contractor in India. Really, really, really strong development team, though. It took me years to get them.
Hey, Nathan, can you go back to the last
business?
What was that, guys?
How much time do you spend on the business?
Michael would like. This is Michael. He's my CFO.
Yeah, I was gonna say introduce Michael.
Michael, say hi. They can't see you. You got to come closer.
Sorry. Hi, everybody.
So he would like if I spent more time on it, to be honest. And I don't want to because there's probably Lively customers on here, but during the audit process, obviously I spent probably maybe 20 hours, and there's a few team members doing a lot of the work for me. But I mean, monthly, if I were to be just frankly honest, because I don't mind because I have other companies and Lively is just kind of, ponied along, but I'd say 4 hours a month, 5 hours a month. And that's being pretty generous.
This is one of the tricky questions.
It's a self-sustaining company. It's always been very, very easy to run. The only time I spend a lot of time on it is when we're adding features, we're fixing something, we go through an audit, taxes, that's usually Michael sees me mostly working on tax stuff. Haven't put that much into it, to be honest, guys. I mean, you'll think I'm silly and you'll think it's ridiculous, but I have a few other companies that are doing pretty well, and I got into different industries. So, that's kind of the reason why I'm here, is I feel like it's not fair to the customer base for me to not be adding features, not growing it. These people have been paying for a long time. They're amazing customers. They love the service. They love the software. And I personally feel like the company deserves more than the attention that I'm providing to it.
Akil, going to you real quick. A lot of founders will say, it's all basically profit. Like, I don't spend a lot of money. It's, it kind of runs itself, exactly how Andrew sounds. But you always in the back of your head go, okay, when I buy this thing, will it actually spit off this profit, or will all this other stuff pop up I have to do? So Akil, do you believe the fact that if you bought this, it would spit off the sort of cash flow you're seeing in this model?
No, absolutely not. I think it takes a lot of time to understand the business. There's a lot of moving parts that we still haven't got into. A lot of people to meet and understand the user, understand the product. So by the time you get to that, your first couple of months, you're spending way over 4 or 5 hours a month. Yeah. So maybe at some point you can build in a system to get back into that, but you've spent a lot of time understanding it, building it, which got you to where you are today. Can I ask a question on the P&L on the last one?
And there is one more interjection. I did staff, but there is like Amazon AWS, Pay Kickstart, which we use as our platform. There's probably about, I'd say, an additional $500 just on like hosting and stuff like that I forgot to throw in there.
Yeah, Neaton in the comments, good question. Again, those of you just watching, you're watching Deal or Bust. We've got Andrew selling lively. We've got 3 buyers asking questions. We're about 6 minutes away from the buyers working towards if they want to make some sort of offer or they state they're out for whatever reasons. And then we're bringing in 3 experts. Peter Zotto, who does pricing, maybe the best pricing in the world for SaaS companies that price intelligently. He's going to look at lively pricing and give some advice on whoever the buyer is for this sort of company, or if Andrew ends up keeping it, what pricing changes or optimizations he would make. We've got Dev coming on with PoweredbySearch to look at the SEO strategy, and Emerson Spartz coming on, who's a media genius, looking at unique ways to get this in front of more eyeballs. So you have all that to look forward to. You can also comment in the questions. I'm reading them live. I see Brad Costanzo, Nitin Verma, Frank Shaw, Adrian Romero. Good to see all of you guys. Go ahead, keep conversing, guys. Keep getting what you need to figure out what you'd offer for the software.
So I wanted to ask, anecdotally, or I've been live streaming coding, marketing conversations with friends, right, for a few years. And anecdotally, 90% of the views happen after the stream is over. And that's whether it's Periscope, whether it's YouTube, getting a replay. I'm curious, I'm on your pricing page and I don't see a feature in any of the tiers for replay or recording. Is that just a feature limitation so that someone could perhaps download it and upload their stream to their own website? Or is that against the Facebook terms to record it and let them then host it somewhere else?
So are you talking about recording it prior and then pushing it? Or are you talking about getting the recording and doing something with it?
Getting the recording and then publishing it somewhere else later after the live stream is done.
Yeah, so that's something that we have that's in the hopper. And we do have it to where it saves it in your live history, in your LiveLeap account. But what we were building is the ability to post it to other apps. And I want to be really careful how I word this stuff because just in case, but if a third-party app was generated, okay, it's natively on Facebook. We have it right now to where it goes to AWS. We already have that technology. It's the way that we are going to achieve Instagram because as you know, Instagram has a pretty closed API. And if you're in, you're in. And if you're not, you're not. So the idea would be if you were to make an external third-party app that's a sister company or some type of syndication company or a partner, if you will, that gets it from the LiveLeap history, and then you could essentially push it to whatever network you want following that webhook and integration with LiveLeap. Am I making logical sense or kind of?
Sure. And so it's on AWS. Is it essentially like in a bucket? So in my LiveLeap account, I can see the video recording and storage, but I could also just embed that in a media tag on a WordPress blog if I want to anytime.
Correct. And we have the embeddable feature. The way that it works on now, this is not a live feature, but it's all programmed and ready to go. The way it works is it hits the bucket. And then as soon as it deploys to whatever locations, it removes it from the bucket to eliminate the amount of storage costs on AWS. So once there's an execution, it eliminates it, puts it in the LiveLeap history with an embeddable link. But the embeddable link is a Facebook embeddable link. Now, when it comes to the third-party networks that you just mentioned, it goes to the bucket. But then once they execute to whatever networks they want and it creates the embed code, then it removes it from the bucket because obviously video, right? You have thousands of customers doing video on AWS. It's just going to skyrocket the cost. So one of our intentions is always to be keeping storage as low as possible and keeping bandwidth and performance as high as possible.
How are you thinking about storage? Sorry, I'm going to let the other guys jump in. How are you thinking about storage? Is that a potential moneymaker later? I'm trying to look at tiers, but I don't see like gigabytes, megabytes per plan?
There's like, I'm serious when I tell you this, brother. There's a million things you can go through to increase and make the pricing better. We had a partnership that we were starting with Twilio where they were going to white label their service completely for us. We were going to start charging on tiers for text messaging, email. ActiveCampaign was going to do a white label for us. I mean, when I was really in the trenches working this business, we had potential to charge for everything. Every time an email is sent, we can make money on tiering. Every time a text is sent, we can make money on tiering. Storage of videos or creating embeds or WordPress integrations or maybe a WordPress app that's free. Think about that alone. You put that on the WordPress marketplace, how many people are going to be integrating that? Not to mention, we also have the feature, which I don't know if I want to say this feature just because if I release it, I know competition. If competition
Say the damn feature, Andrew. What's the feature?
So I built another software called Wagic that builds digital courses. It's almost very similar to like a Kajabi. And I have a lot of money into it and built it for myself as an internet marketer because I never was happy with all the other platforms like Kajabi. No offense, guys, but made it completely custom, tailored it for the film industry. So now we have it to where there's going to be integration with Wagic, where when you go live on Facebook, it automatically creates you a page like a ClickFunnels page with an opt-in and everything else that you need. So then you can log essentially your custom audience inside Facebook or Google. If you're using Tag Manager, you can actually push the people, have them watch the video, but go to a page so then you can captivate and retarget that audience on the marketing networks. Because obviously your Facebook Live video, you want to retarget them with your offer, with whatever it was. So I built a platform where when you go live on LiveLeap, if you have the integration on Wagic, it pushes the live video automatically to your page, sends an email automatically and everything else to your audience, a tweet, the whole 9 yards. All those links that they're getting in that farm are going directly to the page. So it's a Facebook Live embeddable video, but they're watching it on your page, which then gives you the opportunity to market to them more. Not to mention that once it's done, it pushes to the course area. So this Wagic, essentially what I'm saying, builds digital courses so that you can sell them online. So what happens is every time you go live, like let's say Nathan's live, he goes live all the time, right? 30 times a month. Instead of downloading the video, uploading it to Vimeo, putting the embed code, building the course, doing all that stuff, LiveLeap automatically pushes it into Wagic, which we could have third-party integrations with Kajabi or whoever. But once you're done going live, it pushes it for you, puts in the description, the title from Facebook, so you're not typing anything out. And then essentially from there, you could actually build a digital course utilizing live streaming, which what we saw during COVID and what we're seeing in the future is that people are wanting to build digital courses and sell their content online and or to grow their audience, right? They're either going to offer it for free to build a list or they're going to sell it as a course. So our thought process was let's tailor to that need of all the marketers and let's make it to where once you go live on LiveLeap, it's set and forget. Notifies your audience, sends them to a page so you can retarget them. Your marketing team could retarget them. From there, you can organize and build a digital course using Wagic. But we would do it essentially with ClickFunnels, Kajabi, all the big markets. We just haven't because we wanted to use Wagic, our internal tool, to do it because we can get that MRR. And
Andrew, just to jump in, because we're getting close here to where these guys need to make a decision and you guys can have a little negotiation back and forth. So we've talked about product. We've gone through economics, which you guys see on the screen. 2017, $150,000 in software-related profits on 180 top line. In 2018, 230,000 top line sales of product, of which about 180 flowed to the bottom line. And then in 2019, through 3/4 of it, about 132,000 top line, 111 bottom line. And what you guys are all wondering is, well, what is this looking like in 2020? I'm buying it now, right? This is what 2020 to date looks like. So Andrew, can you talk through this real quick? Talk about the customers on these plans and what we're seeing from a revenue trend perspective.
Yeah. So essentially you're looking at hold on, I'm looking at the months because I don't like how it does that week thing. It drives me crazy, but I think you're looking up to May 31st. I'm almost positive when I sent this to you. But essentially $72,305. So when the whole Cambridge Analytica thing happened, they set the app to where profile sharing stopped working. And we did get that feature back, but we did have a dip on people that are like, I only use it on my profile. So what happened was the company dipped a little, but then once we fixed it, it started ascending again. And then when COVID-19 happened, the company just started growing immensely because I created 3 new campaigns in marketing, Facebook and Instagram ads, essentially marketing to churches, real estate agents, and live streamers. And so we created all new animation videos, new funnel pages, all that stuff. And what we did was we started inclining the company significantly. We did about $5,000 to $6,000 in ad spend, and we added about 3,500 MRR to the monthly. So it's a proven factor. When we were talking to Dustin is actually, I don't see Dustin, he's not on the call, but Dustin was like, man, you should just scale this company. And so when I spoke to him about a month back, he was going to list the company and sell it. And I said, I think I'm just going to scale it, And so, there he is. There he is.
He's watching.
So anyway, I told him I'm going to run ads and see what happens. Spend $5,500, raise MRR 3,500 a month. I mean, significant revenue when you're looking at how long our customers stay with us. So that was kind of the thought process. You throw a couple zeros behind it and you just move forward. But I frankly, to be 100% honest, don't have the bandwidth and time for it. And Michael will tell you that there's just not enough time. I mean, we're making films right now. We're launching films. We're building digital courses. We have an audience of over 200 million people. The film that we made is Think and Grow Rich, which I'm sure many of you gentlemen might have read that book. I own the intellectual property for Think and Grow Rich, and I'm the only company that could make video content or movies based on Think and Grow Rich content. So I acquired that business. I acquired 60% of it, and I now own 80% of it as a partner. And so the audience and the things that we're doing for the world and making the movies and making an actual impact to people's thought processes and positivity, to me, is where I want to be. Software is great. I have 9 different softwares and I love software. I'll keep launching them. I'll keep selling them.
So
But
Andrew,
my heart and soul is Think and Grow Rich.
So just to pivot back, that's why you're obviously selling the company. I want to give these guys all the information they need to look at the current business, and if they were going to offer something, what the amount would be. But guys, before we do that, what I really want to ask, I want to get your guys' feedback in the audience. A lot of you guys are also buyers. A lot of you guys are also potential founders who are selling. You've seen the revenue, so call it between $100,000 and $200,000 top line over the past 3 years, and profiting somewhere between $100,000 and I'll call it $150,000 per year with minimal expenses. Why Andrew goes and focuses on his other businesses that are doing well. So question I've got for you guys, what's the right price? All of you guys watching, what's the right price? Go ahead right now, just leave a comment. If you're on YouTube, leave it in the comments on YouTube. That helps more people see the show. But just give 2 sentences when you add a comment. What do you think the right price is? Would you value this on top line revenue, right? Call it $150,000 between up to $200,000 top line revenue and do a multiple on that? Would it be 2x, 1x, less than 1x, 5x? What do you think there? Or are you guys value buyers? And would you look at this more like a cash flow perspective as a side project? You'd buy it and then grow the cash flows, of which there's anywhere between, call it, 80 and 150,000 annually in free cash flow. So go ahead, leave a comment. Let me know your price. I'm curious what you guys are thinking. And let's pivot back. Last question for each of you, Akil, Tim, and Ryan, something related to valuation, pricing, or revenue. So you guys can get, in 2 minutes to the point where you can, say, I'm in, here's an offer, or I'm out, and here's why. So Tim, let's go back to you first. Any revenue questions about the P&Ls and expenses?
So real quick on churn again. So how many of your 15K MRR users have been with you 1 year ago?
I would say 90%. Hold on. Let me look.
He's got the charts. And what tool do you use to track all this, Andrew?
It's called Pay Kickstart.
Yep.
It's similar to Infusionsoft and all the other guys out there. JVZoo.
While you're doing that, Steve Nicosia is saying a financial buyer is interesting. Strategic might pay more. Let's see. Steve, Mr. Moneybags over here. Mr. Moneybags, Steve, I'd pay around $600,000. Interesting. Who else? We've got Carmen Persili. Again, guys, put these in the actual YouTube comments, not the YouTube chat. That helps more people see the video. Carmen said 500K. Dev is saying if 10% churn is right, it's not that bad. Preston, in terms of the deal, is saying 3.5 cash flow, not bad. Largest variable is based off time commitment for a non-founder. So yeah, Tim, real quick, when you buy companies, do you put in your own CEO and run them, or how's it work?
Yeah, we do. And that also makes it hard kind of comparing a business which is essentially kind of run in maintenance mode to a business where you actually want to do something and grow things. And we put in our own CEO, but we also have a bit of a team to help with things like marketing and analytics and accounting and all the usual stuff. That, of course, is kind of a shared resource.
Great.
It's such a tough variable because somebody has to get up to speed. So when you buy initially, it's obviously more of an expense. But if that person is able to perform the way that they are supposed to and grow it the way that it has, it's worth it. So that's why the expenses are so interesting to me, because anytime I show expenses, they're like, no way, that's impossible. But it's like, but you got to understand, you're learning a technology, you're learning a framework, you're learning the processes, but there is a ton of capabilities beyond that. So I didn't mean to interject, but I think it's really interesting what you're saying, because it's just spot on.
To me, it seems like the move here would be to place a technical marketer who wants to prove themselves, who wants to be a CEO type, basically in a CEO role, almost let them run the whole business. If they could keep hold of the team you already have that you built, Andrew, that does the maintenance and the feature bumps. What I thought was the most interesting thing you told us today was that 65% or so of the users are using it every day. I thought that was an insanely high number. I thought people were using it like once a week, but that's just, me live streaming once a week.
Facebook has the metrics too. So when you have a Facebook app, you can log in and look, and it says like daily usage and everything, which I'm sure you guys know. You guys are extremely experienced. But so here, check this out. My browser over here is being weird for whatever reason, so I had to do it on my laptop. But
hold on.
MRR right now is 15,305.92. That's where we're at MRR. Oh, sorry guys. Let me pay attention.
Yeah. It's hard to see, Andrew, but just say it verbally.
Yeah, so 15,305.92, and then the churn for this year is 19.39%.
Revenue or logo basis? 19% revenue churn, or the quantity of logos churned has been about 19%?
It's cancellations.
But based off number of logos or the revenue the logos represent?
I'd have to find out. I don't. Kickstarter doesn't like tell you, so I never answer a question unless I know the answer.
That is a good non-answer to my question. All right, guys. So let's get into this. Ryan, Tim, Akil, I've seen you guys taking notes. You're sort of jotting down things. Just to summarize again, those of you watching, we're here with Andrew, who founded LiveLeap 3 or 4 years ago. The company has grown over time. In 2017, did about 180,000. 2018, 266. 2019, about 170, north of that with additional 3 months there. So far this year, they're up to about $15,000, $16,000 a month in revenue. Expenses, the biggest expenses you're seeing right now on the screen really are tied to bank fees, affiliate commissions, and owner draws and contractors so far today, along with PayPal fees. So you can see those expenses here and what's flowing through to the bottom line. In 2019, about north of 113,000 in profits. Let's now go over to buyer panel. So my goal here is to get you guys to the point where you can either say, I'd pay something like this for this sort of tool and negotiate, or you're out for X, Y, and Z reasons. So Tim, let's go to you first. Where's your head at?
So I think this is a nice little business. I'm with Ryan. I think the right kind of technical marketer plus the right product developer could scale this. I think it's a nice spot. It's a good value proposition. It's not the right thing for us because we put in a team and we need those businesses to be a little bit bigger from the beginning. That's why we started 500 ARR, and even that is kind of on the small side. So we prefer things to be over $1 million in ARR, and we're really interested to buy businesses over $1 million ARR. And for that reason, like it's just kind of subscale, and it would probably mean that we would need to invest a lot more into the business before it can actually get profitable again. And yeah, for that reason, we would be out, but it's a cool little thing, and I think you've done a great job building a really good product there.
Thank you. Yeah, that's essentially it, right? If you're putting big teams in, I totally get it. And I appreciate your kind words.
Tim, that was great. We're down to 2. Ryan, Akil, let's go to you first.
Quick question. What's your LTV? If you can give me that number.
Let me see.
I think that'll help a little bit.
Lifetime value for those of you that are new to SaaS world. That means what are customers on average paying over the lifetime with you? They've got 1,300 customers that are paying sort of this price point. They've got another 581 on the trial and 58 on the professional.
I'd have to run that report, and it's going slow. But hang on one second. I think I can get it rather fast. I'm
doing some live math here on the screen. 107 107,053 divided by 1339 is an average price point of what they're paying.
And everybody knows LTV, and I'm like almost ashamed I don't know. Hold on.
Yeah, take your time there. Ryan, tease us a little bit on a scale of 0 to 10. Sure. How interested are you or not interested in the business are you?
I'm a 6.5. I would be an 8.5.
Okay, don't say anything else. That's the open loop. There we go. We have an 8.5 coming up after Akil, and we get lifetime value. This is like, what the hell? I'm like trying to produce this shit live. What was I thinking? All right, lifetime value, Andrew. What do you got? What a range is fine too. If you don't know, you can just say you don't know too. That's
with numbers, I don't like to say I don't know. I mean, usually our stick rate. I mean, the customers that we've had have been customers forever. But I know that when I ran it before, when we were doing a lot of the Facebook advertising, obviously LTV was everything. So we're most like 90% of our people were already at like $140. So it's hard to say, you know, and 140 is low, but it's like, since we went to monthly recurring, it's only so many months, you know, and when I ran it, it was like a year ago. So honestly answer, I couldn't tell you, but I know that the customers we have stayed. So it's kind of, I'll have to run a report. I mean, I can get it. I don't know if there's a follow-up to this, and I'll throw an LTV in the comments or whatever, but I don't want to answer it unless I know.
So Akil, do your best job without the LTV data.
Okay, so based on, I'll just say one thing. So I noticed something in your P&L and your financials. There was a drop in your revenue. I think the other one, if you can pull the other one up, 2018 to 2019, I think your revenue dropped almost in half. Yeah, right there. So go from 230 to 132. So for us, that's kind of a red flag and kind of an issue for us, because we look specifically for companies that are growing at least 10% a year. So I'll say that's kind of a main issue for us.
There's also an entire quarter missing from that as well.
What was total in 2019? Do you know, Andrew?
If we pull that QuickBooks funds. Yeah, hold on, guys. We're gonna pull
Sure, that'll be helpful.
It's fair to say though, Andrew, it didn't in those 3 months, October, November, December of 2019, you didn't make up the extra 100K gap. So you did shrink from 2018 to 2019, right?
No, yeah, we did shrink during the Cambridge Analytica scandal because they turned off a few of our features, but we got the features back, and then that's when you see an ascend in 2020.
Yep. So while Andrew is pulling those numbers, Akil, I'm curious to get your response to some of these comments we're getting in the chat.
Okay,
Steve is saying, this I'd look at something like $350,000. Does that feel high or low to you?
350, just going off your numbers here, was a 15K profit. It's a little high.
Mm-hmm.
I think, yeah. I'd say a little high. I wouldn't go off ARR, my numbers, just because it's not growing. They're not reinvesting back into growth as much as other companies we see. So I definitely use some kind of EBITDA calculation here, which I think a lot of people are using.
Ryan, what about to you? 350 feel high or low?
A little bit high for a couple of reasons. First, we mentioned we're around 15K MRR, 1,400 kind of fixed team costs, 500 AWS, so 13 MRR kind of gross margin, but you, Andrew, working on it 5 hours a month, you're sort of playing that role of that technical marketer who can kind of run the whole show. And even if you're working on it 5 hours a month, to find that talented marketer to do something similar, maybe they want $300, $400 an hour. So I think minimum, that's another couple grand a month in kind of a skeleton crew to run it. So I would say it's really like 11, 10K MRR net profit a month. And then my main concern would be the platform risk of Facebook. On one hand, I appreciate that you've always gone through all the hoops and you've gone through those audit processes. And I've gone through a couple Facebook audit processes for FOMO.com, and it's really, really painful. So I give sort of some value to that, but I also sense that at any moment they could still rip it from us. So I would actually create a valuation somewhere between, I think, 2 to 2.5x EBITDA with that adjusted EBITDA, accounting for a future marketer. And there would be a clawback provision that if, Facebook pulls the app from the marketplace in 6 months, maybe that would impact a holdback amount, but something along those lines. So 350 is somewhere around 2.25x of 13K a month EBITDA. But I think with a couple more add-ons, it would be a little bit lower than that.
So Akil, I'm going to force you into an answer here because we're running out of time. Give me either an in or an out. An in would sound like a number. An out would say I'm out for X, Y, and Z reason.
And so I'm going to add to Ryan's point. So Facebook is another risk. They could, I think there's a lot of ease of replication on this, and they can also, build this themselves pretty easily, I think. So for that reason, I think from an IP perspective, I think we're going to have to say I'm out.
206.
I love just kicking the sharks when they say I'm out. I just boot them off the back end. It's like hasta la vista, baby.
Yeah.
See
So
ya.
2019.
Akil, good stuff, man.
So Nathan, 2019, 206,427 and 16 cents. So about 207K.
207K. So from 230K top line, Cambridge Analytica down to 207,000, still profiting somewhere between like 90 and 120,000 on the 200 top line.
Correct.
Yeah. Okay. Says the CFO. So that's got a stamp of approval. All right, Ryan, last one here. Again, we have no idea what's going to happen. There's been nothing sort of planned before this. You guys really can take this anywhere you want to go. But guys, you heard Ryan, he's a 6.5 interest level. In order to hear Ryan's feedback and the price, here's what we're going to do. If you're loving Deal or Bust, the Shark Tank for SaaS, go ahead and click the thumbs up on YouTube. If we get 50 thumbs up, we're at 26 right now. We'll let Ryan jump in and see if him and Andrew can work something out, or maybe they both walk away and they keep doing the same thing. We don't know what will happen. So if you're enjoying this, go ahead and click the thumbs up right now. Ryan, as a marketer, I mean, you got to love this psychological shit that I'm doing, right?
Respect.
Respect. All right, good. So
you left out the share, though, man. You left out the share. They got to share it. They got to share it.
I know. All right, very good. So let's just. I'm gonna kind of bump out here, let you guys chit chat back and forth. So Ryan, where's your head at?
Well, I mentioned my interest level is a 6.5 out of 10. It would be an 8.5 out of 10 if it wasn't Facebook. And this may not be rational. I'm not trying to bag on Facebook, but I personally am not a Facebook user. I haven't been a user since 2011 or so, the Obama administration. And I think as rational or irrational as that is, it's difficult to be part of a product when I don't eat the dog food. So I wouldn't be using it. I wouldn't, I'd be using Periscope and dreaming up features related to Twitter pushing out to something else and not from Facebook. And I think that will impact my ability to sit in the captain seat and understand the business intimately. But I really like, for example, there was a comment 20 minutes ago. Someone said that they were a user or they were a customer and they only left because they, quote, I think there's somebody named Frank, they thought it wasn't being updated. So that is promising to me. I know how to update apps. I can rip on apps all day long, right? We have a team, that's no problem. The pricing, the lack of optimizations there, that you're not thinking really about charging for storage or making that part of the tier, that is like a huge opportunity to me as well. I see all of those things as like the renovated, the house that needs some fixer-upper attention. So that's all positive. But the Facebook only thing, the platform risk, Andrew Metal is mentioning this as well, feels a little bit too dangerous for me. So we're out because it's Facebook and I don't use Facebook.
There you go. Ryan, appreciate you, man. All right, Andrew, this was like you had no idea what to expect coming into this. I want to make sure you leave with like real value here. So what I did is I convinced Dev Basu and another guy, Peter Zoho, along with Emerson Spartz, to come in. Dev runs PoweredbySearch. Dev, how are you?
Dude, doing so well. This has been really fun to watch.
It's kind of interesting. Andrew really is the most courageous one of us all, because it takes a lot of balls to come on and say, like, I'm naked. Here are my financials. Let's see if we can get a deal done.
Where's the towel?
So Dev, before we go to Peter on pricing and Emerson on media, you took a little look at LiveLeap's SEO. To talk to us about what you found.
Okay, so here's what I saw. I think the biggest opportunity for this business is you can't compete directly with Facebook for Facebook Live. If you search Facebook Live, you're going to start finding their live solutions page, which gets about 10,000 searches per month. But what you can compete with is this. Instead of trying to teach people for how to do a Facebook Live, which is you guys have like 9 blog posts right now. And so there's lots of room for optimization over there. But most of your blog posts are teaching people how to do a live. You might find it beneficial to be the buyer's guide when it comes to content marketing. And so if you search like Facebook Live app, and that doesn't in itself have a lot of searches. I think it's about 1,000 searches per month, totally monetizable. But if you look at it, Social Media Examiner is the number 1 blog post. They mention you guys and a couple of other tools, but I think you could really own that space. So given that you know lots of internet marketers. They've used lots of different types of tools. Compile a list of the 50 tools you mentioned, some of them no longer working, and then start creating a comparison matrix around how LiveLeap might be the best for a certain kind of user. If you did that, it's going to get a ton of links because it's ego bait, right? All the other tools you mentioned are going to link back to you as well. And the idea behind this is that, some features are going to be exactly the same, but the big thing that's going to help you rise up in the ranks and really own it is going to be a single, number of blog posts, go really deep. Right now, yours are kind of short, but so is everybody else's. So it's a really level playing floor. I would go and do that. I'd build this piece of content that teaches people what to look for and what to look for, how to buy the right kind of app. Because otherwise you're competing directly with Facebook for, how to live stream, how to share, those types of things. They rank for that and will always occupy the #1 position.
Yeah, it's funny because we haven't done a lot on the SEO side whatsoever. And it's funny because our top affiliate is a YouTube guy who just did like how to Facebook live stream. And if you search Facebook Live, he's like #1 everywhere. And he's like our top affiliate. We pay the guy every month. Like he gets sales,
I love that. Guys, Dev has done this with a lot of software companies, including ClickFunnels, CallRail, 24/7 AI, which just passed 300 million in top line revenue. He's the guy a lot of SaaS companies rely on for this sort of thing. So you can check him out at PoweredbySearch.com. Darwin will put that link in the chat. Dev, thanks for jumping on and giving your feedback, man.
Cheers.
All right, let's jump in with Peter. So Peter is with a company called Price Intelligently and talks about everything pricing related to SaaS. Peter, how are you, man?
What's up, guys? How you doing?
What's up, Peter?
Well.
Nice to meet you.
Good, Andrew. Nicely done, man. I'd echo Nathan. It takes a lot of guts to come on here and open up. So kudos to you for doing that. And sounds like with 4 or 5 hours a month, man, this is pretty impressive. So well done.
Thanks, brother. I appreciate that. Pleasure to meet you.
So
Cool.
Peter, you guys are sitting on about 15,000 different or 18,000 subscription companies. You're looking at all of their data. You're putting out reports all the time. You took a look at LiveLeap's pricing. What are they doing well? And if you could only make one change, what change would you make?
Cool. Yeah, there's a couple things going on here. One, I think, Andrew, purely from an optimization point, I think you have too many value metrics, right? And value metrics, just for the folks who are unfamiliar with these, it's just the unit of measurement that you charge on. So in this particular case, you have users, you have collaborators, and then you have social networks. I would try to reduce that down to 1, maybe 2, right? You can have users as sort of your formal value metric and social networks as your second, or what we would consider a backstop value metric. That allows you to keep people in a plan that makes most sense for them. But as they either use or add more functionality, or in this case, social networks, they have to upgrade. That's the first thing I would say. And I think the main thing we see with most SaaS businesses is they don't have a value metric. So they either feature differentiate or they just go all in, right? Neither of these are particularly effective for making sure that people have the right plan or the right set of value points. That's my first and sort of big takeaway from the pricing page. I know we're up against time, Nathan, so I don't know how much deeper you want me to go here.
No, you guys can jam for there's 60 seconds here.
Cool.
Keep taking time, yeah.
The other thing, purely just from like increasing your revenue, right now, and by the way, there's sort of like 2 different pricing pages. I know if I scroll on your home site, if I scroll all the way to essentially the footer, there's more plans there. But if I click on pricing, I get to the page that Nathan was just showing. My recommendation here is actually just go up a little bit more, Nathan. Sorry, not the footer. Keep scrolling up.
Yep.
Keep going. I guess it wasn't at the footer. Yeah. So that visual is different from the other page. So this was confusing to me, and granted, I'm hypersensitive to pricing stuff, because here you're showing both an enterprise and a corporate plan, and you weren't doing that on the actual pricing link that's in the header. The one thing that I would have you consider, you could actually add, I like the idea of having a $1 trial, but I'm not sure if there's a lot of thought process there, right? I would either make that what we call a faux free trial, make it completely free, and limit the number of actions people can take or the number of things that they can do with the app before they have to upgrade, right? So every month they only get 1 live feed. And at the end of the month, and they get all features, they get all access to the platform, but as soon as they hit that limit, they get locked out from the product until the beginning of next month. That's a good way for people who are relatively small and starting to whet their appetite with a product like this to start getting involved and understanding the product. And then the second thing here is, if we look at that pricing page from before, what I would actually do is you have, in this particular case, you have $1, it converts to $19, and then $49 is your pro plan. I actually think you could probably have a faux free trial, so $0. you could have a starting plan at $9. And then I think you probably have another plan that's closer to 39 and not 19. You can knock off the $19 plan and probably not lose a lot of conversions and just increase your ARPU for that particular cohort without much work.
The free definitely was one of the things that we were going to do. We're going to make it to, you could only like share to like 3 pages or something like that.
Yep.
And that was like, the only reason I never pushed it out yet was because obviously the support team needs to be scaled because it's going to get a massive amount of users fast.
Yep.
So it's a matter of like scalability and planning. And to be frankly honest and transparent, I just haven't been putting enough time and effort into that. So
Peter,
that is killer feedback, Peter. Thank you.
Yeah, these guys. Peter's like ARPU increasing master ninja. That is
that's a lot of pressure you just put on
or something, man.
Yeah.
Peter, thanks for jumping on, man. I appreciate you.
Yeah, good luck, Andrew. Thanks, Nathan. Cheers, guys.
You bet. All right, next guy I want to bring on. I've been watching for a long time. He's done a lot of stuff. I'm surprised he's like back somewhere where he has video. Emerson, how are you?
I'm good, man.
I feel like you're always running around. I could never catch you. I'm like, he's going to be in Thailand hiking somewhere with no internet, or he's not going to respond, but you're free and you have internet. So this is great.
Yep. Quarantine perks.
Quarantine perks. So real quick, guys, just in case you don't know Emerson, he built a great company when he was very young called MuggleNet, which basically became like the largest Harry Potter fan site. Emerson, how many uniques at the peak?
It was about 12 million.
12 million uniques. He then went and started building a company called Dose, which was essentially another media business built on the back of these tactics he was using, which Emerson at its peak reached how many uniques?
That was 55 million uniques.
And you raised some capital there, I think, right?
Yeah, we raised 35 million.
So with all that context, if you were solely focused on like a quick tactic, like a media tactic to get lively, maybe, press on Forbes or Entrepreneur or Fortune, how would you think about it?
So typically in these kind of situations, from a growth perspective, I have this giant list of like, we'll say 500 different growth tactics. And I basically want to Vulcan mind meld with you and just run through the checklist really quick to see which ones you've done. And then I have them in a certain order of importance, the ones that are most likely to yield the highest benefit, right? Obviously we don't have time to do that right now. So I'm going to double click into the category that I think is the most likely to yield the laziest results that most people suck at. It's mostly virality related tactics. Because I can tell that like you don't want to work on this business anymore. And so if I just give you a bunch of like blocking advice on like other types of internet marketing stuff, then it's not going to land. So within the category of virality, which is interesting to me because you can be really lazy about it. As a good example of this, like the Facebook profile frames that you saw, in the last few months where people put the stay home, save lives thing. Well, that was me. I was like, this would go super viral, and I just had to kickstart it the right way. And then tens of millions of people were using it, and it was #1 on Facebook, right? So for that, and how it's relevant to this is there are a bunch of different things you can do to build virality into your distribution, because you already have people using your product and they already have audiences, right? So how many different tactics have you tried to like get people, your own audience, to promote their perfect. I didn't even know it was an ad week. Excellent. Although I didn't like that design. Anyway, doesn't matter. Okay, so how many different tactics have you tried to build virality in the product? Like a little thing that says like, syndicated by Live Leak or a watermark or a pop-up or stuff like that, That's
exactly what it says. So we have syndicated by Live Leak, and it's called Power Affiliate. We don't push it at all. When people basically sign up, it's inside the product and you can activate it and you can become a Live Leap affiliate. And then when they do a live, when it syndicates, everywhere where it syndicates, it says syndicated with Live Leap. And then it has a link, which is a cloaked link with the auto link cloak generator, whatever, if you will, for the customer who puts in their affiliate link from Pay Kickstart. But we've never pushed the feature.
What do you mean you haven't pushed the feature? Like you haven't, yeah.
Like we haven't mailed our list. We don't make them do it in the beginning when they're setting up. It's not in the interactive walkthrough when they first sign in. It's just a feature that kind of sits there. And if they do it, they do it. If they don't, they don't. But most marketers would push that feature more than anything,
Why didn't you push it?
I mean, I'm being honest, released the feature and then just went on to the other things I was doing and just never pushed it, man. Like I need to, I should, but
yeah,
here we are today.
So I would definitely try pushing that. And then, cause that seems even easier than all the other ones I was thinking about. Cause you have the hard work of setting up and finding it.
Growth hacking 101, right?
Yeah, exactly. And it seems like a good 80-20 thing. And then there's about 20 other things that are usually pretty high leverage, like low hanging fruit things to try. Like little watermarks and little, just all kinds of different random like branding shit that you can kind of sneak in there. Like most people, especially these are like random pastors and stuff, like they're not going to be super, they're going to care as much about you kind of advertising your product or on their product, especially if they're only paying a little bit per month. So I would just start testing a bunch of those things. And if you test like 10 of them, like one of them will work well, and it'll just be free, customers for very little effort.
Yeah, and for who knows how long, right? And then we're back on the call, Nathan. We'll be back on the call in a year, and it'll be like, they didn't get an offer. Now they got 20 million. Because what Emerson said.
The biggest deal that Tim Ryan and Akil missed. Yeah, I hear you. I mean, Emerson, your point's a good one though, right? Which is there's so many founders watching right now. And even, Andrew's a great example where they know like what should be done. And the question is like, what's the quickest thing with the least amount of work? Because frankly, most of the most successful entrepreneurs I've met, they're the laziest. They want to get the most done, putting in the least work. And that efficiency is what drives the success. So the Powered by Live Leap is one good example. You want to tease us maybe with one more from your list?
So they're all okay. So as far as like getting in Forbes and things like that, obviously, it's pretty easy to get logos for your website by just getting like a Forbes contributor to mention it, and then you can put up a Forbes logo on your website. So that's a really and then there's tons of like other contributors to the other major business press too. Those are obviously just logos for credibility. As far as like real meaningful customer acquisition from like media, I would just put all my lazy points into getting your customers to promote it for free right now.
Yeah, lowest cost too. I mean, that'd obviously be the lowest cost. And then the Forbes and all that stuff is great, and getting the logos is good. I mean, to me, that's more of a convincing tool for the customers or the new customers coming on the site. So it's more of a conversion metric. We would use Haro if we did it. We do it in our other businesses because they have a lot more searchability. But because the searchability was kind of low, I just never, it's what it is type thing.
Yeah. Emerson, this is good stuff, man. So what are you working on now? Where can people find more from you?
You can just follow me on Twitter, just at Emerson Spartz.
Emerson.
Not Facebook.
Not as much on Facebook, not anymore.
Emerson, thanks for making the time. Appreciate you. All right. Good stuff. All right. So Andrew, we had 3 buyers. We went through financials. You got some good feedback. There was a lot of people in the comments saying, 3, 4, 500K. Where's your head at right now? Before we wrap up and I show folks the stealth project we're working on, and Andrew, there are people asking about the Think and Grow Rich video, which we'll spend a couple minutes on right at the end. Before that, where's your head at right now?
I wouldn't even think of selling it for less than probably 600, 550.
And why is that your number?
What's that?
Why is that your number?
Just the opportunity, like what I know, the scalability. I mean, last month I ran $5,500 in ads. I now got 3,500 MRR. Add a couple zeros to it, we're good to go. Throw a CEO in the seat. I mean, that's a risk that I'm willing to take because I know, like, just based on these guys' feedback alone, you can see that the right person running the company is probably the most important thing right now. So it's like, even if I get the company breaking even, having a decent CEO and they grow it, it's going to be easy to ascend that revenue. And 600K at the end of the day is like a drop in the bucket, man. It's at the end of the day, you look at 600K and it's 300K when you're dealing with the feds in the state. Like, I'm in the United States. I live in California. I'm paying my taxes. I always pay my taxes.
Yeah. So step one.
I'm going to make that much money.
Step one, move to Austin or Florida. But look, so to your point, like, here's the thing, like, here's my take on this. I hear founders all the time. They use the exact same logic that you use, which is I've got all these side projects. I would never sell less than 600K. But what none of us are really good at valuing is opportunity cost. And so like, you strike me as a guy, I mean, you made the frickin' movie. You're probably very good at compounding. And so $1 today is worth to you probably $4 3 years from now. Like doing nothing. Like you could if you had 100 grand today.
At all times. That's
yeah.
Wherever I spend my money, I'm like, oh, don't worry about that. It's more like, it's like buying Cougarans. It's like you buy them low and then you're like, don't worry, in 5 or 10 years, they'll be worth more money no matter what it is. Or like a house or properties or anything. I mean, usually when I'm spending my money, I'm spending it towards future projects because I've known as long as I have 5, 10, 15 projects in the hopper, one of them will do well and I'll make all the money back for the investment.
Yeah. So my point, Andrew, my point though is on this specific business, if someone came to you with an all cash offer, right, that was equal to something like 1.5x, right? Or maybe max 2x. So let's say it was a $200,000 check today after tax. It's like 150 to you or whatever, 120, 130. It depends on how you do your taxes, right?
Well, is it cash or is it a check?
Well, yeah. But my just
a little bit different.
just finishing my thought though. Like the point is, you're not doing the things that you know you should be doing anyway on the business because you're busy. Like
Yeah.
that's the whole point. Like you're actually selling this not to like, in my opinion, maximize the cash you can get right now for it. You're doing it to get cash as much as you can so you can go keep doing and investing in things that you really, really like. That's where I get stuck with founders on valuation price.
Yeah. Yeah, I agree with you. I mean,
Yeah.
that is the case.
All right, let's real quick. I'm going to give everyone, because I told you I would do it last time. We're going to do two things before we wrap up. Number one, I'm going to show you this stealth project I'm working on. You saw the wireframe last time. And then Andrew, shift your brain from Lively to Think and Grow Rich stuff. We've got Steven and some others that have questions about you for you on that movie. So guys, very quickly on the stealth project that I told you guys have been watching the podcasts. You've been watching the magazine, which by the way, we've got Ryan on the cover. It just went to the printer. It's printing. It'll go out to about 10,000 this month, featuring 400 Bootstrap founders. Darwin will put the link in the chat with you guys if you want to grab that magazine. I just need your shipping address by 4 p.m. Eastern today, 4 p.m. Eastern, and I'll get it shipped to you. But you guys have been watching going, what the hell is Nathan going to do? He's got to do something in SaaS eventually. This is, I believe, what I'm going to be working on for the next decade of my life. You can see it here on the screen. If I do this properly, it's this pretty simple Excel chart. It's a pretty simple Excel chart. You're watching right now. You've hustled like crazy to get up to like $500,000, $1 million in revenue. You don't want to raise VC. You want to stay bootstrapped, but you want cash. Well, I've started to write checks into software companies at super low interest rates. So I can write a $200,000 check into a SaaS company. And what that Sask founder will pay me back, right, is an interest rate, which comes out to about $9,000 a month for this term, which is 2 years. So the arbitrage here is if you can take $200,000 today and add more than $10,000 in new MRR over 10 years, you now can build your whole SaaS company, keep all your equity, and build it on the back of my debt. Right. So this is something that I'm spending a lot of my time thinking about. You guys saw the wireframe already last week. This is sort of what it looks like, but we're going to build a site, a calculator where founders can go to the site, plug in how much cash they want, and actually see what that debt cost might look like. If you want to see the update, I'm working on this and building that company real time. I'm doing deals real time and all that. Make sure you don't miss this show next week where I'll give an update. We'll have another founder on who's selling. You can go put this on your calendar right now at nathanlacka.com/next week. And Darwin will put that link in the chat so you guys can go block that off. Andrew, we've been tough on you. Now you can be tough on me. SaaS debt. Keep your equity. No personal guarantees. You think there's a market for it?
Absolutely.
I thought you were going to be tough. I thought you were going to shit all over it.
I mean, I totally think there is, because with my opinion is most SaaS companies, that's kind of the thing, is like you hear from the folks over at ProfitWell, and we changed the page, but Emerson, a lot of these guys, Peter, the thing is that a lot of the times they want to do a lot of those things, but it does require having a good CEO or somebody who is 100, 200K plus per year. And it's, unless your MRR and the money is there and you're not pulling from the company, it's hard to accomplish that, right? You don't want to have your staff members or somebody who works for you being unstable, but at the same point, expect them to perform and implement a lot of the things that you need. So I think cash for SaaS businesses is amazing. I think it's a great thing to have. And the reason I can say that so efficiently is because 90% of the internet marketers and SaaS businesses that I have been exposed to grow and build their companies, even from a development perspective, with PayPal working capital loans.
Yep.
So I've already seen it, and those are 10%. So it's solid to me, because most of the guys out there, the guys that are doing this stuff, that are building stuff, they'll take like 100K PayPal working capital loan, pay back 110. They'll build a software and they'll have it done for 80K, pay themselves 20. And then within the first year, the PayPal working capital loan is paid in full. So it's kind of, they're not even using their own money anyway.
Yep. No, you nailed
the ones that I know, the ones that I know.
Yeah, you nailed it. You're going to see a lot of people doing this. AWS is doing it. The PayPal loans, those are MCA lenders, merchant cash advances. You see Pipe doing this. You see Clearbank doing this. You see Shopify Money doing this. A lot of firms are doing this. Sometimes that capital can be expensive, but the challenge I've seen is that for SaaS companies, they'll only really lend up to a max 1x your monthly recurring revenue. So I see an opportunity to do, like, write bigger checks. I'll write up to 1x your ARR. So if you're $1 million company, I wrote you $1 million debt line, pay it back over 5 years, use it to triple your company, keep your equity. That is my gut. I don't know if this is going to work, but that's what I'm working on building. And I'll give you guys an update. We'll have the website next week for you guys to take a peek at. Andrew, thanks for your feedback. I want to wrap up now with Think and Grow Rich. All these other side projects you're like printing money on. So what is the project, the Think and Grow Rich project you're working on?
It started as just almost like I got kind of thrown into it because there was a gentleman who wanted, I have an NDA, so I need to be very careful about what I say because I acquired them. I bought them out of the company. So I do have to be careful about the information that I release. But met an individual, needed to launch the movie, didn't want to go through the typical distribution channels, Netflix, the SVODs, everyone else. Put it on my platform, Magic, got it ready to launch it, launched it, did good with it, did some licensing, stuff like that. Now we're building it into more of like a bigger personal development company with multiple films, multiple training programs, digital training programs, stuff of that nature.
Oh, bro, I just gave you the stage to keep talking about it. Okay, so it's a movie, there's training courses. So what's the business model?
The business model is just a personal development company to help people through film and digital training courses. Very similar to what you see with like a Tony Robbins or Dean Graziosi partnered with Tony. They just did a launch recently, that type of stuff. And the movie's a very big, inspirational, uplifting movie about Think and Grow Rich and how the principles have created more millionaires and billionaires than any other book in history. We got some good cast members in it. Real good folks. Andy Garcia did the narration, music by Fall Out Boy, some good key factors in there. Bob Proctor, Rob Dyrdek, Grant Cardone, a lot of really neat cast members that we interviewed for the movie. So it has What's the link, Andrew? Thinkandgrowrich.shop.
Thinkandgrowrich.shop.
Mm-hmm.
Okay, good. Yeah, we'll put that link. And when's everything go live?
We're in the process of doing the actual launch, but we have kind of a big plan in place that I don't want to say, but we're not in the business of charging for the movie. So we want to change the world with the movie, being that the world's not in the greatest shape right now. So we have a big plan for a market stunt, and we're looking for some virality. You
got it. All right, Andrew, thanks for coming on, man. You guys are all watching Deal or Bust. Andrew came on. Check out his company, LiveLeap. Andrew, thanks for having all that courage. Go prove everyone wrong. Triple the company. Prove them all wrong.
No, I'm good, man. I'm happy.
Thanks. Have a good day. All right. Guys, so just to wrap up, I do want to talk about books real quick, right? So Emerson is talking about like marketing books, things like that, 80-20 rule. I actually am a book fiend. You guys can't see this. I guess actually you can see it if I do like something like this. You can see books in the background, but 80-20 marketing is a really good one. Emerson, I love this one. Anytime I need to write an email copy or anything, I just open Ryan Holiday's old book, Growth Hacker Marketing. Actually, let me see if I can bring Emerson back on real quick. Maybe I can. Yeah, Emerson, sweet. 80-20 marketing is your go-to?
Just the 80-20 rule is it's the most important rule to have like properly installed in your like range of tactics because it applies to every other tactic you would use. So it's super meta. But I also really like growth. I really like that book as well. Actually, Ryan interviewed me for that book. It's great.
Oh, did he? That's amazing. I have to go back and pull out your section. Yeah, this is like when I'm writing email or doing growth. I always come back to this. I always come back to this book, 22 Immutable Laws of Marketing. These are like very short. But dude, they just, those books you read and you can only read 4 pages and your mind starts buzzing and then you have to go do something. These are those kinds of books.
Yeah. One other good one especially for people watching this would be Ask by Ryan Levesque. Ask and Choose. He has a new book, Choose. Ask it's super templated, right? He just gives, it's like there's just no fluff. It's just like, here's like very specific templates I use to solve very specific problems. And he just goes into more detail than most books do, where they stay in theory land. And he hangs out in theory land a bit, but he's mostly just giving you lots of really, really concrete examples that are the exact kind of examples you need to like figure out how to actually apply the theoretical marketing advice.
Yep. I'm trying to pull these off my bookshelf as you memorize them. I have them very organized, but not like where I can just grab them very quick. But yes, Ask is a really good one. I just read that by Ryan Levesque. These are some like scammy ones people don't know about, but they are effective. Ray Edwards, Copy That Sells, really good that's a good one for you too. Emerson, You read it? What about How Scammy Can We Get Here?
I love any book that puts dollars,
dude,
money on the cover.
Any sophisticated business person would never read this because it looks scammy as heck because a salesperson wrote it. But oh my gosh, all you have to do is read like the index and its headline ideas out the wazoo. That's like I come with my email marketing headlines.
Yep. Actually, the best is if you want to learn about business, you should read books by business people. And like the more that they're practitioners, the more likely they are to actually like need to create real value for customers to make a living. And so they're more likely to have like minimize the fluff. Whereas books by academics or journalists, they typically have just tons and tons and tons of fluff because they don't actually have skin in the game for like selling people like business people do.
You nailed it, man. What do you think from a media perspective? This is the only second time we've done this show. We've got to polish it a little bit more, but what do you think?
I thought this was great. It's basically like the pitch, you know, the pitch.
The podcast
show. Yeah, it's basically like the pitch, but for like more sophisticated, like people. It's like the pitch is, it's, you know, he's trying to design the show so that it appeals to the widest possible swath of viewers, right? So the investors are obviously really credible, but he spends a lot of. I mean, they cut it in a weird way that makes it so it's like doesn't feel super authentic, and he also spends a lot of time explaining like really basic business shit that's just kind of boring to listen to, and you're kind of like, come on, move it along, man. Yeah. And also, it's not like you're much more. Yeah, you move it along for a different type of audience, which makes it like a more interesting kind of like higher level version of the pitch. I just wrote in my notes to hit you up after to tell you like you should just keep. And this is also like you haven't even like experimented that much with this yet, right?
No,
like,
only 2, dude. We got to keep changing things.
Yeah, exactly. So like I can only imagine what you're going to be like after running 30 of these things. Like I noticed it basically like versus in your normal interviews, they're really interesting because you are inherently like focused on getting signal from it, but there's no tension where it builds towards a climax. There's no tension where it builds towards a resolution, right? Like every movie, every book, they're always building tension and release cycles, right? Like open loops, close loops, open loops, close loops. And with this structure, you're building towards a thing that happens at the end of the show, which inherently, like I noticed that the energy is building the whole time, which makes it just more fun than a normal Q&A like every other podcast and interview does.
Yeah, we're experimenting, man. This is one of the things where I want to shine a bright light on so founders can learn, but it's hard to convince a seller to come on. It's hard to convince sophisticated buyers to come on and do this stuff live. It usually happens behind the scenes, but we'll try it out, man. I appreciate you putting your brain into this thing and giving everyone great feedback. You've got a lot of fans in the audience. I'm reading all these going, Emerson's a stud. I'm going, how the hell do all these people know Emerson? This is great.
Yeah, thanks for having me. It was fun.
All right. All right, guys. Again, Nathan Latke here. You just got done watching Deal or Bust. I want to thank all of you guys for watching. We'll be live again next Thursday at 1 p.m. Central. You can go make sure you join that link. Don't miss out. NathanLatke.com/next week is the link to make sure you can put that on your calendar. We talked about books today. We talked about if you want the magazine, that link is in the book. That link is in the chat. NathanLatke.com/magazine. That ships at 4 p.m. today. So go put your shipping address in there if you want a copy. We will chat about in the magazine, just to tease you for a second. It's like a list of companies and all their revenue and their data and everything. It's basically a written version of my podcast. So I want to thank all of you guys. If you're an original podcast listener, OG, I especially want to thank you guys because the podcast is really what got a lot of this stuff going. It's why founders trust me. It's why sellers trust me. It's why they agree and get them to agree to come on. So thank you for all of that. If you are new and you're just going, who is this Nathan guy? You can check out the podcast at that link. I just put it in the chat. It's called The Top Entrepreneurs on iTunes. And that is the best way to get your business data. Until next week on this show, Deal or Bust, 1 p.m. Central. Thanks, guys, so much. Have a great weekend. Bye-bye.